Hey traders, welcome to this week's FX commodities and crypto game plan. Starting with the economic data we have this week, I think the interesting numbers that we'll be focusing on are what's coming out of China. We have the Chinese GDP and retail sales coming out Monday morning. And most importantly, I think Wednesday is the PBOC interest rate decision. And given what's happening in China, we've seen a massive fall in credit. House prices on the low or moving lower month by month, and 1.6% lower than last month, and again 1% for the previous month. So we're really starting to see those house prices fall off, and you might find that the PBOC is going to be looking to defend the house prices, defend what's happening in their economy by devaluing their currency, by cutting interest rates, and you might find that to have quite a big effect on the US dollar. And once the US dollar starts to run, then we start to see the kind of major turn in the narrative that we've been talking about for a few months now, basically since the dollar bottomed in early January, February, somewhere around there at that 89 handle on the DXY. So really interesting to see how the market has slowly turned. The dollar is still making new highs, and that could really start to accelerate as emerging markets start to kind of feel the heat of that stronger dollar. The stronger the dollar gets, the stronger the dollar will get. That's kind of how it's going to unfold in the emerging market world, and that's what we're seeing there. So yeah, interesting week ahead with the Chinese data and what's happening within China in terms of Evergrande and some of the other big Chinese retailers that are really, or not China retailers, the Chinese property developers really starting to take some heat, lots of defaults potentially on the cards, not just in Evergrande, but many others. And some of the research we've done into what's happening in China and the size of the shadow banking there, and the complexity of the shadow banking products is really starting to be worrisome towards the global economy and what we believe will be a deflationary shock starting in the emerging markets and then spreading into developed markets from there. China, obviously a massive player in the global market, and if they take a big hit, if they go into that deflationary cycle, that deflationary spin, then I really believe that the market is underweighting how much that's going to affect the global economy. I think we're going to see commodities really start to sell off. We're going to see the dollar really start to run, and that stronger dollar, like we said, is just going to really hit emerging markets, and that's going to just lead to a stronger dollar. So it's going to be a reflexive cycle of, as the dollar gets stronger, it causes more damage. Markets flow out of emerging markets back into developed markets, which leads to a stronger dollar again. So just this reflexive cycle of capital flows, just like we saw in Asia, in the Asian financial crisis in 97, 98. It's capital flows that are going to be driving this market, and we believe capital is starting to flow out of the developed markets, out of the reflation trade, and back towards kind of safe haven status, more in the US dollar than anywhere else for now. Interestingly enough, we do see a shift in the yen moving forward. Maybe not just yet, not quite there, but we do see a yen strengthening over the next kind of 6 months moving forward, maybe starting in the next 3 months, maybe even less than that. We'll just have to wait and see. So let's go to the charts and see what we're seeing this week and what's on the cards in terms of trades. Starting with the DXY, starting with the dollar, we still believe that there's potentially going to be a little bit of a run in the dollar, a little bit of a weakening in the dollar over the next few weeks. So maybe what we're talking about, that narrative of a deflationary dollar, maybe takes a little bit longer to play out than we may think. But structurally speaking, it does look like the dollar is ready to take one last leg down before taking off to the upside in the real strong full bull market that we're expecting the dollar to go into. Although that being said, it's also very possible that all of this was just a wave failure of the previous down cycle. That was the bottom of the dollar as a wave failure, and this move here is actually the first move off the lows, and this might just continue to run moving forward. So that's something we are keeping an eye on, we are keeping track of. And if we do see that move in the dollar, it does appear to be more euro based than anything else, given what we're seeing in the chart. So we might find a bit of a stronger euro moving forward. It's just euro based move in the dollar up towards the kind of 119 to 120 handle, and before we see a complete fall from there in the euro. And that being said, that is looking a lot like a break and retest of a neck and shoulders headline on the euro. As you can see here, I've got a pretty nice left shoulder, a little bit of a head, excuse me, wrote that wrong. It's a little bit of a left shoulder there, the head is up there, and nice little right shoulder that has broken through, and now we're going to go look to retest that neckline up at that 118, 119, somewhere in there, that region, before we see continuation to the downside, and a strong continuation move at that. Also possible that we go beyond the neckline up towards the 120 region before seeing the turnaround, so we might see a false break to the upside before we really see that tumble to the downside. But either way, it's looking a lot like a US dollar bull market over the next few months once this kind of temporary dollar weakness falls through or moves through the system. Why we think it could be euro based is when you look at, say, the pound. Just give me a moment to clean up this chart a little. We look at the pound. The pound looks like it's just in a shorter term corrective structure, trading up towards kind of 138.50 to 139, somewhere in that region, before seeing a turn to the downside from there. That's the structure we're seeing there. Nice little ABC corrective structure. So we might not see that move in the euro, or it might be euro based. That's kind of how we're playing the market at the moment. We did take a little bit of a nice what we call a structured day trade to the upside last week. Got some nice profit running there. Believe there's still a little bit more upside to go in this one, up towards kind of 1.385 will be our full target there, and then a potential turnaround back towards the dollar strength that we've been calling for many a month now. So that's looking good. Aussie dollar, US dollar, a little bit of a different picture. Structurally speaking, it's a little bit confusing because we had this really nice corrective structure to the upside. Nice little ABC corrective move. It looked like we had topped out in this 74.60 region, and then quite a nice move to the downside. That kind of faded away as we started to chop back up, back towards those highs. So it's possible that was just more of a complex C wave, a 1, 2, 3 C wave that's a little bit more complex than the A wave, but still the structure looks ready to go and the structure looks sound. That's how I'm reading it for now. We just have to wait and see how things play out moving forward. We do have a position on here. We are slightly underwater. We're probably 0.8% of our capital underwater. In terms of risk, the full risk of the position is 1.6%, and I'm hoping that we don't go all the way up to our stop loss. It's a nice wide stop loss for this position, so hopefully we just go break these highs at 75 and then turn to the downside there and finally get into profit on this position. This one's been kind of chopping around our entry order for some time now, and hopefully we're going to see that profit. And why I like this structure is when you look at the New Zealand dollar, US dollar, we're seeing something very, very similar, but even better, much cleaner structure. You see, you got this ABC corrective structure and a really nice strong move off those highs. Again, you look at this little corrective move that's been here, gone surprisingly high up here, but when you look at the structure, you've got a nice ABC kind of zigzag corrective move, and we may turn around from here, and again, we may just be going to make a new C wave to the upside to complete the C wave, not a new C wave, but a more complex C wave to the upside to complete around 72 before falling from there. So not that much upside left in that move, I believe. But again, we'll have to reevaluate once we start to see the price action in this region. We'll have to take it from there. US dollar CAD, a similar scenario. Right now, I'm looking at this as an A, B, C, D, E expanding triangle, and then acceleration from there. Still really like the higher time frame structures as a continuation. If you guys remember our FX report from the beginning of the year, our 2021 preview, we did say watch for the Canadian dollar to come down to this 120 region and then take off strongly to the upside from there. And that's exactly what we got up until kind of 2-3 weeks ago when we started to see quite a strong counter rally there. But I do believe all of this is just still corrective of that initial impulse off the lows. And once that correction kind of sorts itself out, we will see a stronger dollar moving forward. Same with US dollar Swiss. We're seeing this temporary dollar weakness, but that should turn around at this 191 handle, somewhere around that region, and head back to that dollar strength market up towards the 95 level. There's another one we traded on a little shorter term, what we call a day trade. It actually takes a couple of days to play out, but it's a structured day trade, very, very clean price structure, in some nice money here. We actually have this now at break even, so there's no risk on the table, and the position is just running into profit and should continue to run into profit the rest of the week, maybe even a couple of weeks after that. US dollar yen, we actually are long against, we are long the US dollar here which is counter to some of our other positions we have at the moment, and that's kind of nicely in profit here. We were expecting a little bit of a deeper pullback from this structure, but that actually turned into something more of a lower time frame kind of triangle in that area, and then a breakout to the upside. Kind of at the edge of that higher time frame limit of the structure, so we believe we should be in correction here for probably the next week and then continue up there. Our full target for this trade is up at the 117 region, and as we said, once we get into that region, I believe we're going to see a turnaround in the yen, and we're going to see a stronger yen moving forward as we go kind of fully risk off. So we'll be watching for that as an indicator as to where the market's going from here. Silver's been really tricky. We had this really big C wave, what I'm still looking at as a C wave to the upside. It's also possible that it's not a C wave and it's actually more of a higher time frame C wave, where we see silver up towards 26. Again, a kind of head and shoulders neckline retest, where you have this, I wouldn't call it a head and shoulders because it's kind of a shrugged head and shoulders, if you want to put it that way. Little break of this neckline, this green neckline, and then maybe a move up towards 26 to retest the neckline and then fall from there. That is a possibility that I have to take into account, and that's why my silver position is at risk-free. It's at break even. There's no loss here except for the cost of the trade. And what you can see here is we got right near that stop loss, and we saw quite a nice turnaround heading into the final hours of yesterday's session. So when you look at gold, you saw the same thing. A very big dip in gold. More indicative of a continuation to the downside, another ABC corrective structure, which looks like it's going to be falling to the downside. So I'm hoping silver follows gold heading into the beginning of next week, and we can start to see our silver trade start to run. We've got an extra position sitting here at 21.26 to add to our positioning, and we believe a new low here. We get to 21, we're basically going to fall straight through the floor to 18, because there's no volume in this place when you look at the setup, because we had such a strong rally from kind of 17, 18 onwards up to 21. When you look at the volume profile, you can see that basically when we break the floor at 23, you can just see there's this just massive gap pretty much down towards that 18 to 17 handle, and then even under that there's not much there. So I believe a break of these lows and making new lows is going to be a fall through the floor and a very big move, and that's why we added to our positioning there. And we're already risk-free in this position, so adding a bit of risk there is very acceptable in terms of my risk management. So it's looking really good for a trade. And same thing what we said with gold. I prefer to trade silver in this positioning because gold should be rallying against silver as we head into a more deflationary environment moving forward, and that's exactly what we're seeing in this gold-silver ratio. We did say a while back, watch gold to top out at 2,000 and then fall down towards the 1250 region. There's still quite a long way to go to the 1250 region, but I do believe that's still on the cards. If you take a look at gold-silver ratio, as I mentioned, we've had a really strong move off those lows. And what happens here is when you look at the gold-silver ratio, usually in an inflationary environment, you see gold perform less, or silver outperforms gold. That means there's an inflationary environment. And as you turn away from the inflationary environment back towards a deflationary environment, you see gold start to outperform silver. And that's exactly what we're seeing here. And just to give you an indication of why we believe what we believe and what we're trading, 2008, big stimulus, lots of talk of inflation, all of these things. We saw a massive move in the gold-silver ratio. And then all of a sudden we saw a turnaround, and what happened here was the European sovereign debt crisis as Greece defaulted on its debt. And what we believe is going to happen here is an Asian debt crisis. We believe it's already unfolding, and this is how you get gold to run against silver. So I'd rather be short silver than gold in that scenario, and that's why I like it. Copper. Interesting to see copper breaking higher from here. I don't think the break higher is going to be meaningful. I don't think there's much there in terms of upside. Even if we make new highs, I think that's limited and capped to the upside. For now, I'm still looking at as a little bit of a corrective move, a corrective structure, something like an expanding triangle. I would say it's an A, B, C, D, E, a lot like we're seeing, I guess, in gold on the lower time frames. When you look at gold, I believe what we're seeing here is, as you can see, an A, B, C, I think we're in the D wave now to the lows, then an E, and then a continuation to the downside. And this is just the central part of the D wave. So watch this to fall to new lows, pop high off those lows once more, and then collapse from there. We're watching that. I believe copper's kind of putting the same thing. They're just a little bit behind the curve. Platinum, still really bearish platinum. We've had quite a strong rally off these lows, but I believe this is just a great sell opportunity. I'm waiting for the turnaround here to put an entry order, a short sell somewhere in this 1050 region, but I'm waiting for the turnaround. I'm waiting for the momentum to die here. But in terms of structure, we have a very, very beautiful ABC corrective structure that's ready to fall to the downside once momentum dies on these lower time frames. And if we go to, let's say, the hourly, we're already starting to see this momentum fall off. So going to be patient with this one, but I think there's going to be a great short trade there that's available in platinum, which I may or may not take. I've already got quite a bit of risk on the table in the precious metals, adding to my silver position, which I like even more. But we'll wait and see. We'll discuss it in the members area and see how we're going to take that on moving forward. But I really, really do like that platinum short. Really, really nice trade. Euro New Zealand, another trade we took last week, coming out of a nice corrective structure, impulse, correction, impulse, textbook, and really, really falling pretty strongly in the profit now, which I really like. I think we can get rid of this. This was a kind of cautionary potential for price structure. That's fallen through the floor, and we're now on the way down. Our price target for this trade is sitting at this 155 region, which gives us a nice 4.75 to 1 trade. Very, very nice setup, very, very nice trade that's running in the money really well now. So we'll be watching that throughout the week, just managing that trade moving forward. Euro Swiss, I'm looking for a little bit of a pop here before looking for a short trade. There's kind of a complex high time frame structure that we will discuss in the members area, maybe tomorrow or Monday. But what you're seeing here is a lower time frame, what I believe to be an A, B, C, D, E, given the nature of the waves, and I think a breakdown from there could lead to an acceleration of the Swiss against the euro. Obviously the euro falling against the Swiss, and that means we want to be in this trade moving forward. So we'll be watching for potential trades somewhere in this region moving forward. So watch for that coming out of a very nice structure. Might get some complexity in this E wave, but that's something we'll be watching for. This euro is looking really weak at the moment. That's why I'm kind of skeptical of this euro US dollar rally, because the euro is looking weak across the board, and the dollar only looks really weak against the euro, and that's more than likely got to do with an incorrect reading of the position that we have here of this wave, where we believe this is part of a corrective move, and it's actually probably more of a wave failure. So just something we'll be watching this week. Euro pound, again, looking really weak. We did say watch for a rally up towards this 86.60 region a couple of weeks back, and then a fall from there, and it's fallen beautifully. It's just been basically a straight line down. Sadly, it's moved on without us because there wasn't really much of an entry. There was a bit of a riskier entry for our members up in this region here, which gave you a very, very narrow stop loss, but as you can see, that's kind of paid off in full already. You're sitting at probably 6% profit on that trade if you did take that trade. Really, really nice trade. But for me, I missed out on it because I didn't get the setup I was looking for. Euro yen, as you can see, the yen is just getting hammered across the board. The euro is running, which is kind of sad because it's left without us, because again, we were looking at this as a big ABC corrective structure. We looked at this as the takeoff. We ended up having a break-even trade here, made a new low, took off from there, and then started to make another new low, and it kind of threw me off the positioning of that trade because it started to look like a correction for continuation, and then we just accelerated with no real sign of a move higher. So it's kind of running without us, but we are in the US dollar yen trade, so as sad as that is, at least I'm in something and I can watch that profit. But yeah, as you can see, the yen's looking pretty weak. When we look at upside targets for the euro yen, I believe we're going to go break these highs at 137 and then turn to the downside from there. And again, we're looking at a short-term yen weakness, but eventually that's going to turn around into some very, very solid yen strength moving forward, interestingly enough. So I think that's going to be part of a major risk off, and we're heading towards a deflationary shock that's going to cause that risk off, and the yen will regain its safe haven status, and a lot of Japanese investors, the world's largest investors, will start to take that capital out of global markets, bring it home, and that's going to be another driver of the yen getting stronger. So watch for that. That's something not many people are talking about, but that's something I'm seeing in the charts. So really, really interesting. Pound Oz, another one. We were looking for a little bit of a long trade up towards 188. It never materialized last week. Maybe it's starting to materialize now, but sadly this is starting to look like a really corrective structure for continuation to the downside. So it's kind of tricky. I'll need to see something very, very indicative of further upside here to take this trade. But I'm actually more inclined to wait and take the 189 short if we get this set up there, because so far that's really the trade I'm more interested in terms of risk reward. This isn't really looking that great right now. Which members we discussed last week, and that picture is staying the same thus far. Pound New Zealand, same thing, very corrective, very corrective for downside in the pound, but a very, very, very messy structure, and kind of makes me wonder that this Pound Oz is not actually going to pop higher. If I miss out on these two trades, I'd be happy because the structures aren't as clean as you'd want them to be. Pound Swiss, we're setting with a nice little ABC corrective structure, potential entry order below these lows, but I'm still kind of on the fence about if I'm going to take any of these trades. I prefer the pound yen, to be honest, but that's kind of taken off to the upside as well to make new highs. So I think I might wait for this pound yen trade to play out. It's got such a beautiful structure for a big, big move to the downside. Following this move, as we said, waiting for the yen to get strong. So that could be a trade there. Meanwhile, pound Swiss, still looking corrective for downside, although this never got as high as we wanted it to. So I think for now, I'm just going to stay away from the pound and just wait to see what develops there. Maybe actually look for the pound US dollar trade, look to shift that one from a long position to a short position. But again, I'm just going to be patient with that. Aussie dollar yen, another one that's just running to new highs. We did say pound yen in our 2021 preview. We're looking for a move up towards 89 here. That's a very interesting area for us in the Aussie dollar yen. Since then, we saw quite a strong move to the downside. We suspected that may have been the turn to the downside, but then since then, we've seen a quite strong bottom and the yen really rallying against the Aussie, or the Aussie rallying against the yen, excuse me, and looks like it's going to make new highs. So either way, we're looking for the turn, which can be a painful process, but once we get the turn, we really want to be yen bulls and probably take the Aussie dollar yen as our main trade, because that's going to be the main risk off trade, I believe. And the pound yen is a really, really clean structure, which I really like. New Zealand dollar yen is another one that looks really good on the higher time frames. Another one we said at the beginning of the year, wait for a move up towards 83 and turn to the downside. And as you can see, it's a similar situation where we thought we were making a high there and saw the turnaround. We've now made new highs. So all of this is actually just a corrective move for another leg higher. But again, once this leg is done, the yen's stepping into some serious strength. And we'll be watching for that. CAD yen, same story. Swiss yen, same story. Actually really like the CAD yen trade as well. Pound yen, CAD yen, Aussie yen, New Zealand yen all look like really, really good structures to trade once you get that turnaround. And that's what we're waiting for. Our oil long still performing really well, still running pretty much in a straight line, which is always good to see in your trades, and pretty well in the money now. I think 3% in the money on the position. So a really, really good trading week this week, actually. I think we're up 11-12% on the week in terms of just the positions we have running. So that's looking really, really good. As you can see, structurally speaking, breaking out of another flag. Oil's looking really, really strong across the board whenever you look at it. I think this energy shortage is really starting to kick this oil up towards that $100 mark, which is our full target. So we'll be watching this. My only concern is natural gas, which looks like it may have actually turned off the highs. When we zoom out of natural gas to the weekly charts, you can see how structurally speaking, we've got a nice ABC corrective structure that may be starting to turn to the downside from here. So waiting for that to see if we are going to top out. And if this tops out, we really want to have a close look at oil, at trailing a stop loss and just getting our profits off the table in this oil trade before it turns to the downside. Again, heading into a deflationary shock, heading into a Chinese economic slowdown, oil will take a hit, and we don't want to leave too much profit on the table. Currently, our stop loss is around 8.78, so we have just under 1% locked in, and we'd like to lock in a little bit more than that on this trade. But let's just wait and see how things play out. As you can see, the problem 1 hour is we're seeing some MACD divergence already. The momentum starting to drop off, but again, just going to be patient with it and see what develops. US indices, interesting picture. We'll save that for our US equity charts. Anything interesting going on here? Emerging markets still a little bit of a bounce, but still looking good for a turnaround here to the downside. Hong Kong still looks weak. All of these emerging market indices are looking really, really weak. The SET, the KOSPI, the Hong Kong 33, the EM, all looking really, really weak. As you can see, a little bit of a break and retest potentially in the KOSPI, and then Korean won looking really weak as well. When you look at the structure, we're seeing quite a little nice reprieve from last week, but that should turn around to the upside, get a little bit more complex, and then take off pretty strongly, and that's going to be the real break of a multi-decade triangle that's been developing in the Korean won, which should see a move probably slower but not dissimilar to the Asian debt crisis back in mid to late 90s, where we saw the Korean won blow out against the dollar. And that's really what we're going to be seeing across the board in emerging markets. And then US dollar ZAR, really, really frustrating week for our US dollar ZAR trade. We're still in it, but I think our general positioning is somewhere around here. So we're looking at kind of right near break even on this US dollar ZAR, but I do believe it's just going to be later on perceived as a triangle. When you look at the nature of the waves, just looks like an ABCDE corrective triangle for continuation to the upside. I'm just waiting for some reprieve in the trade because it's just been a relentless down move from basically 1505 down towards 1460. 1450 always been a big level for the US dollar ZAR, potential area of support, and we may start to see some upside there. We may even see further downside though as well, so a little bit concerning. And how we're going to manage this trade, I'm not quite sure yet, but we'll discuss that, what I said, in the members area. Bitcoin, big bounce yesterday following the announcement of the ETF approval. Kind of pushed from 57 all the way up to 63, seeing a little bit of a move lower from there, but it's still looking pretty corrective for further upside. Our full target for the trade is 63, though I'm kind of wary about letting this one go. I'm going to be very patient with it, because if we do see meaningful downside here, it will be very, very strong. So I did take a little trade from 56 upwards. If I take break even on that trade, I'll be happy, because I think if we go down from here, we'll be going meaningfully down, probably down towards, at the very least, these July lows at around about 30, maybe even beyond that. I still think sub 20 is on the cards potentially, but I need to see some better structure in here. I am long, but I'm very, very cautious. Ethereum as well looks like it's going to be outperforming Bitcoin for the near future. But again, structurally speaking, we just traded it on the lower time frame with a full target of 4177. When we go to the higher time frames, something like the daily, we are seeing a corrective move that has a leg down on the cards moving forward. So I'm a little bit wary of it and just kind of long but cautious, I would put it. That's how we are positioned there in the crypto space. It's cool, guys. If you have any questions, you can get me on Twitter at Senecalytics, or you can find the Seneca Trading Academy at senecalytics.com. There's also a portfolio advisory service there for more higher net worth individuals. But as you can see, going to be another interesting week for the dollar. Are we going to see the dollar rallying strongly from here, or are we going to see a temporary reprieve in the dollar moving forward? It's kind of wait and see still for now. But yeah, it's going to be an interesting week. Keep an eye on those Chinese figures. Cool, guys. Have a great one. It's been really fun, and we'll hope to see you again soon. Members, we'll see you in the trading area, in the members area, to discuss some of our positioning for next week. We'll see you Monday morning for that webinar, and if you are interested in that, again, go to check out senecalytics.com/trading academy. You can see the link in the bio below or in the description below. Sign up there. If you have any questions, DM me on Twitter and I'll get back to you as soon as possible. Cool, guys. Have a good one. Much love.